Hello and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here one more time in this occasion because the day comes, Google is about to present the new Q3 results for 2025 for this year. And as usual, I'm here just to give you a fresh update with the last topics that you need to know if you are following this company. And obviously at the end, also give you the charts with the projection on the price and the most important levels I believe we should keep in your radar for your portfolio. But before we start, remember, if you are not subscribed to the channel, you should. And also you should click on the bell to receive notifications anytime we update, we publish new information related with the most trending topics on financial markets. Let's go to the presentation. As usual, I just prepare a presentation to give you all details and don't miss any point. This is the Alphabet Q3 2025 investor briefing to review the potential impact of the earning results to be published. Company overview and recent performance. It's interesting. Well, the main segments of business didn't change. We got Google service, which is search, which is ads for any advertisements or marketing. YouTube, Android, and Google Maps has a main source of activity, interactions, and business related with Google. Google Cloud Infrastructure and Enterprise Solutions, and other projects that he's involved on develop new projects. For what was the last performance? What was the last earning results published on Q2 2025? Well, we got a revenue of 96.4 billion, which it was 14% year-to-year up. We also got IPS of $2.31, a net income of 28.2 billion, and operating margin of 32%. Google Cloud reached 50 billion annual run rate and turned profitable for a full year, which is one of the main challenges the company is facing right now, how to become profitable. Especially in areas like in artificial intelligence, because the investment they have done, not only Google, Meta, the big tech of the United States, they have been investing billions and billions, as Donald Trump will say, billions and billions on AI projects. And therefore, for the investors' perspective, the question is, are you capable to get the profitability that we expected from those billions? Are you able to make this money return in terms of EPS for the investors and for the shareholders? That's the main question. What is the Q3 2025 expectations? Well, what we got in the books, what is expected to by consensus, by mainly all analysis, 99.8 billions of revenue, 2.3 EPS per share. We also got Google services estimate projection of revenue will be around 84 billions. And we also got, in terms of Google Cloud, 14.7 billions of revenue, which will be 29% up year to year, which is not bad. It's actually good. Full year 2025 guidance. What is the projection, annually projection, if the Q3 2025 is going according with expectations and also counting on the previous Q2 and Q1 of 2025? Well, the full year 2025 guidance is an EPS of $9.9, which will be 23% up compared with the last year, and also a total revenue of 369 billions, which is 16% up compared with the previous year. It's a massive number, but it's not a crazy growth 1 year compared with another, just a 16%, right? I also include in this presentation what is the growth drivers and what is the key risk that the company is facing, just to give you the last fresh update of, well, let's say, for example, you didn't follow the company closely for the last few months. At least with this video, you got an idea quickly of what exactly they are running. We are talking about Gemini 2.5, which is the last version of Gemini, the AI developed by Google, and enterprise tools across search, YouTube ads, cloud, and workspace. What they're looking for integrate the AI, Gemini 2.5 or the next versions to the whole ecosystem developed by Google, included YouTube, included search engines, definitely to optimize, obviously, the interactions that they generate with this technology, right? Search and YouTube, AI overviews impact, improve click rates, and connect TV and increase engagement, which is something that we have seen in many other companies. Even those ones related with e-commerce, they want to implement AI to optimize the effects of the advertisements on the audience and potential leads or clients, right? Cloud momentum, a strong 30% plus growth with AI infrastructure and sovereignty cloud offerings. They want to also optimize. They are competing with Amazon in this area in cloud services. And what they try to do is optimize the service using the integration of AI in the cloud services developed by Google. Key risk. What is the key risk that Google is facing in the coming months? We got the spending softness. It's very interesting because it's related, they say it's related with economical slowdown and Forex volatility. High capex, because again, this is one of the most important points, not only for Google, but for the rest of tech companies. In the case of Google, it's between 85 to 92 billion invest in AI, well, planned for AI, data centers, pressure cash flow. Bloomberg was published, and we include it in our daily reports, the possibility that we are facing right now a kind of a closed circuit ecosystem or closed economy between all tech companies, renting, paying, and serving to each other in a kind of cycle, therefore generating cash flows that are not actually connected or correlated with the real economy out of the technological sector. But out of that context, the global economy is moving maybe in different directions. Now, let's go finally to the charts and let's take a look. We can see here a kind of long-term chart from 2020, even 2018, here on the past. The cycle, as you can see, is bullish, is good, it's a really strong price in the case of Google. However, in this situation, considering the prices and the levels we got up and backwards, I will say that we are in a hold position. Conservative advice is wait until you see any of those levels post results, post earning publication, obviously $270, $75, or $208, $210 as a support. If we see the price moving either down and going to new entry levels, the $210, $205 per share probably is a good strong support for new entries. And same way, we are in the middle of nowhere right now. If we see the price rising to $270, the chances that if the results are good, if the earnings is well accepted by the market, they're going to break out probably those resistance, and it's a good entry above those levels. If the results are not good, we're going to get new opportunities to grab the company at lower prices, which is always good and more attractive and speculative. In short terms, you can see this very clear. You can see a parallel lateral movement here, which is given to us between $255 per share and the level here, which is $235 per share. Very interesting. But again, if we don't see either tops or bottoms, we are not interested on taking any position in the company so far. I hope this video helps, and also to give you a clear view on the stock. Leave me your comments on the bottom of the video and share it for the next video reports. Take care. Bye.